Welcome back, everyone. So this week on the channel, we're going to be discussing offshore oil, gold mining, and a country in South America called Guyana or Guyana, which I'll be saying both, I suspect. Now, you could say, why are we paying attention to it? Why am I paying attention to it? Why are we discussing it here on this channel? And that's because, well, as anyone who watches this channel somewhat regularly knows, I'm bullish offshore oil. You could say oil in general, and then I'm playing that through the subsegment called offshore oil. And there's varying ways to play oil, and we're going to discuss a sub-theme of the grand scheme of things. So, Guyana's booming oil exports. Crude exports from Latin America's newest oil producer almost tripled in 2022, encouraged by rising production and solid demand in Europe in the aftermath of the Ukraine invasion. So, a common theme in this channel is buying something that is inflecting with macro tailwinds helping to support it in a fundamental way, and then perhaps timing your entry on some technical analysis type fashion, which I really don't talk about. Sometimes you just buy the thing and go with it, and then playing that theme. And so what you want is something that's been beaten down, that's not really having much attention paid to it, and some sort of catalyst comes along and then helps the industry, whatever that specific subsector is, positively inflect. So uranium has been going on, and then offshore oil has been going on. None of this is new news, okay? Guyana's been booming for a few years now, but that doesn't mean it's too late to get in or pay attention or discuss at a cocktail party somewhere. And it's been booming to some extent because real GDP in 2023, I believe, is 38%. So it's been well in the double digits. Now, Guyana has their own little stock exchange with like 15 stocks on it, and I'm not quite sure how one would go about buying names on that, but that might be a play. You could say purchasing real estate in Guyana might be the way to make the play, as they use the oil money to invest in infrastructure and so on and so forth, and bringing more attention and eyes to it. And that's another way to play it. There's numerous ways to play it, but I'm going to talk about the ways I know, which is what's going on in the offshore segment, and then a couple of gold plays. Now the thing is, someone says they're bullish energy or they're bullish oil, and then you have to say, well, how do I express that theme? What medium do I choose? Do I choose the upstream, the business of oil and gas exploration and production? Do you choose the midstream, transportation and storage? And then transportation could be different ways, and storage is different ways. Or are we talking FPSOs? And on the transportation side, are we talking pipelines, shipping? Like how? Or are we talking about transportation of the raw crude product, or transportation of the clean product? And what kind of tankers? Scorpion tankers, TK tankers, like TRMD, TORM. There's numerous ways to express that idea. And then downstream, which includes refining and marketing. And then one of the plays, to go on a slight side tangent here, is if you look at Devon Energy, it's been beaten down pretty bad, and that's because it derives much of its revenue from natural gas, and natural gas is cheap. But then, at some point, don't you think that there'll be an arbitrage between American natural gas and, say, Europe and Asian natural gas? And then how do you get it from point A to point B? And how are you going to close that price gap? And right now, refineries are being built. And then you need liquefied natural gas processing facilities, and on and on, so that you could play the infrastructure varying ways. Established players, small caps, mid. I mean, there's so many ways to play it is the point. So this slide deck is going to be an expression of a very tiny way to play something. And the reason I've included the Guyana gold mines in here is because if you're bullish gold, for instance, then this could be a way to play it as well, which is why I've added it in here. And the names that I'll be discussing to some depth, one depth or another, if you don't have enough attention span to actually do some due diligence, which I can't say necessarily watching a video is, but here's the names. I've given you the Canadian listings as well as the over-the-counter American listings. And if you have an interactive broker's account, and there's one way to play it, you can buy the actual Canadian listings in which there's more liquidity. And then if not, which most people don't have, then you got the over-the-counter listings. And those names, Exxon, Hess, Frontera Energy, CGX Energy, Reunion Gold, G2 Goldfields. We'll discuss those later. So what we're talking about, and excuse me for my mispronunciation, because it's going to happen, is the Stabroek block. The Stabroek block. And that's the primary block being discussed when it comes to offshore oil in Guyana. And remember, Guyana has a population of 800,000 people, which is smaller than some American cities. And here you have the Guyana Shield, as it's referred to in regards to gold mining. And as Mark Bristow, CEO of Barrick, said, a significantly unexplored region and one of the most prospective in the world for large-scale gold discoveries. So, back to the Guyana GDP. This is the International Monetary Fund. Real GDP in 2021, 24%, 2022, 57%, 2023, 25%. So you get the point. The numbers are directionally correct because I know that differs than the chart that I previously showed. The point is it's booming. Okay. South American crude and condensate annual production, 1 million barrels per day. And what you see is Brazil growing in size, and what you see is Guyana growing in size, as well as Argentina. The Argentine elections are coming up on Sunday. I don't know what today's date is, so Sunday. And if you're watching this a couple years out, it's 2023. That's all I can tell you. October. And that's going to be interesting because they have the Vaca Muerta shale deposit, which is allegedly one of the largest in the world. Some say second largest to the Permian in the United States. So they could be growing their production. But we're focusing on Guyana, which is anticipated to grow. You can see it was pretty much non-existent from 2016 to 2019. Then 2020, they come on the map, and then they're anticipated to grow in size, well, at least to 2030. So, Guyana or Guyana, do not confuse it with Ghana or Guinea. This is Guyana. It's between Venezuela and Suriname. It's up and to the left of Brazil. It's the top right, the northeast part of South America. That's where it is. You know, you talk about uranium, and then someone says Kazakhstan, and then you ask him to point out Kazakhstan. At least know, you know, due diligence is at least knowing which hemisphere of the country you're talking about is in. And it's amazing the number of times I've talked to someone and they throw out some country and they don't even have a clue, not within 1,000 miles of where it is. So Guinea and Ghana are West African countries, just to make this clear. And you would think anybody who's done somewhat due diligence on uranium is well aware of the coup that's happened in Niger, and then should be familiar with at least that region, give or take a couple thousand miles, as a consequence of being somewhat familiar with Africa. But I digress from that point. So, I'm now going to get into a bear case, because pretty much all the news out there is positive about offshore oil in Guyana. And I don't care for that necessarily, because it's like, what's the risks? And this is actually a risk I've not heard discussed. And you could say, what's the probability of this risk? And if it's super low, then maybe that's why it's not being discussed, and fair enough. But it's still something worth knowing. So we're going to spend a few minutes talking through this to get a better understanding. So this is the disputed offshore claims of the Stabroek Block. And that's quite relevant, because if you're bullish offshore oil of Guyana, then you really need to understand that as far as Venezuela is concerned, Guyana doesn't own it. And this kind of dispute, if it escalates to the point of violence, can really drive off final investment decisions. It can really drive off foreign capital and shut down the whole thing. And a few years back, I think maybe 2018, anyway, a gunship of Venezuela's took hold of operation that Exxon was doing for 4 days. So these are real threats. So the República Bolivariana de Venezuela Comunicado. Doesn't that sound official? So there's a couple of decrees. The decree number 1.787 on May 26, 2015, just so happens the same month as the Lisa 1 discovery, which was Exxon's. That's when Guyana, the prospects for Guyana offshore oil really took hold, is when ExxonMobil made their first big time discovery, which is then the same month that Venezuela. See, you could say that this offshore stuff isn't worth fighting over, because it's not doing anything. It's just ocean out there. Fine, we'll let Guyana have it under false pretense or whatever. But then once you realize that there's money in them ocean waters, i.e. oil, then you're like, well, hold up. Like, we were letting you have it, but it was really never yours. And now that we see some money's going to be coming from it, that's actually ours. You know, kind of how in the early days of the U.S., we relocated the Native Americans into some hills, and then we found out that there were gold in the hills, and then we were like, you know what, actually, you're not going to be in those hills. We need those hills. And then you just relocate these camps because it's no longer beneficial. Okay, well, this isn't. Okay, we're taking this part of your land, but you can have that part of your land. And then it's like, you know, on second thought, we also need that land too. So anyway, then you have decree number 4.415 on January 7th, 2021. So though the Bolivarian government of Venezuela will continue its unwavering vindication and defense of the legitimate rights of the Republic over Guyana Essequiba in order to reverse the serious historical injustice of the null and void award of 1899. As often is the case, I'm interjecting here, often is the case, these things inevitably go back decades, hundreds of years, sometimes thousands of years, and then people, you know, just take recent events that's unraveled in the past couple of weeks or in the past couple of years of how everybody's a Ukraine-Russia expert or everybody's now an Israeli-Palestine expert, and, you know, the degree of ineptness and incompetence and rhetoric from most people on those topics is, well, embarrassing. So just know that these things are long disputed issues. that go back and forth, back and forth. So, in that sense, Venezuela will continue to move forward with the framework of the Bolivarian peace diplomacy, the protection and defense of national interests over the area constituted by the entire territory located from the party wall of the Essequibo River, the area under claim. This is mainly talking about land, but it extends to the ocean, I remind you. And the maritime projection of the area under claim. That's the picture I showed you that Venezuela is essentially claiming most of, practically all. The rights over the rivers and the river provisions referred to in the null and void award of 1899. And then the origins of the dispute date to 1831, almost 200 years ago, the year after Venezuela became a sovereign state. At the time, the British Empire was consolidating its territories along the northern coast of South America, which it had purchased from the Netherlands in 1814. The area to the west of the Essequibo River was among them and became part of the British Guyana. Spain had previously claimed some of this land, yet Madrid's preoccupation with independence movements across Latin America prevented Spanish authorities from contesting British occupation of the region. In other words, you own what you can defend, and they were busy entertaining other prospects, so they didn't have the manpower to defend this region, so they conceded it, is what it means. But following Venezuela's independence and then the discovery of gold, and yet again, it's not worth contesting till it's worth contesting, or it's not worth defending until it's worth defending. And then the discovery of gold in the Essequibo in the 1850s, Venezuelan authorities asserted their inherited claim, going as far as breaking diplomatic ties with the UK in 1887 until the countries could reach a compromise over the borders. And this is quite relevant to the gold mines that we'll discuss later on. Then we have Maduro has vowed to reconquer the Essequibo, issuing decrees in 2015 and 2021 to establish Venezuelan maritime boundaries that encompass Guyana's exclusive economic zone and repeatedly deploying military reinforcements to the disputed borders since 2015. In 2021, a joint statement about Venezuela's eastward claims released by Maduro and his own opposition represented a rare point of agreement between the dueling political forces in the country. Nothing brings enemies together better than a bigger enemy that's taking your money and land, which you could say economically is one and the same, or the same difference. And by the way, I'm purposefully avoiding the deep sentimental ties of such matters because that's beyond my comprehension and understanding and research and everything else. This is an investment channel after all, and sometimes it's relevant to know those things to understand how things might play out. Like, how serious is Venezuela in going across the border and taking what's theirs? Because they have quite a larger army than Guyana. And then you could say, well, what's the political dynamic between U.S. and Guyana, being that many of their operations are trying to extract oil there, and what kind of things might they send over to Guyana to help protect those interests, and so on and so forth, which you could say really dehumanizes the whole situation, and fair enough, but humanizing it doesn't necessarily help you understand the fullness of the situation, but only partial amounts of the situation, which is how you make unforced errors and poor investment decisions. Furthermore, tepid condemnations of the Russian invasion of Ukraine from Latin America leaders, including the president of the region's biggest economies, Brazil and Mexico, leave the door open for Maduro to pursue Venezuela's Essequibo claims aggressively. And despite increasing U.S. security cooperation with Guyana, by the way, I need to stop interrupting myself while reading. Numerous links will be in the description for this video, so keep that in mind. And despite increasing U.S. security cooperation from Guyana, U.S. rhetoric and training have hardly strengthened their country's posture. Unlike the well-armed Ukrainian military, Guyana's defense forces are outnumbered more than 100 to 1 against Venezuela's sprawling security apparatus and have only a handful of patrol craft to defend the country's waters. Nor is Guyana a signatory to the Inter-American Treaty of Reciprocal Assistance, meaning that other countries in South America are unlikely to defend Guyana military even if they reject Maduro's belligerence. So this would be the May 20th, 2015. Don't forget, Maduro's first decree happened May 26, 2015. So this is when things really started taking off. The iceberg beneath the water, so to speak. ExxonMobil announces significant oil discovery offshore Guyana. ExxonMobil Corporation today announced a significant oil discovery on the Stabroek Block, located approximately 120 miles offshore Guyana. And since then, they've been implementing new developments, new platforms, new drill sites, and they've been hitting it quite hard, to say the least. And just a couple of them are the Yellowtail Project and then Gas to Energy Project. They're building pipelines. They're building all kinds of infrastructure, and that's going to help Guyana citizens theoretically, and as well as Exxon, because they're going to get gas to the land, and then they're going to power things with gas, and then they're going to get off of imported heavy oil and such that they use to burn, and then that's going to help things and help the country and help these companies and help investors, because they're really dedicated to these FIDs. So now, hopefully you look at this map again, you better understand it. Interesting fact for those in America, Guyana is the country in which Georgetown is located. And if you say to yourself, man, Georgetown sounds awfully familiar, that's because that's where Jim Jones poisoned all his cult leaders and followers, or whatever you want to call them, with cyanide. Now, some call it a suicide, mass suicide, but you could also call it a mass murder. And that's where the phrase drinking the Kool-Aid comes from, which is interesting. And another fun fact is that it was actually Flavor Aid that they drank and not Kool-Aid. So it's kind of funny to see a progression of events occur that then bastardizes and talk about bad publicity for a company like here Kool-Aid is minding their own business, and now they're being associated to Flavor Aid, which yet again was just innocently minding their own business, and then it was the medium used to have, or that led to the, indirectly led to the death of hundreds of people. So, fun fact there. Now, I don't know what to make of this as a sentiment indicator, but you can go to Twitter and type in Zona en Reclamation, and then a lot of interesting things pop up that there seems to be, who knows how much of it's propaganda, how much of it's legitimate, how much of these are bots, so on and so forth. But I suspect a fair deal of it are, well, legitimate people who want their claimed land back. So I'm going to kind of digress off of the Venezuela threat. And then I want to talk and poke some fun in a snide, cynical, sarcastic way to Guyana's Low Carbon Development Strategy 2030. Guyana's LCDS 2030 plan. Now, this will be in the description, a link to all this. Chapter 6, Aligning with Global Climate Goals, Oil and Gas Within a Low Carbon Framework. I'm not going to beat a dead horse here too much, but it is absolutely classic to see the kind of gaslighting and ignorance and foolhardiness and misdirection that occurs in this topic. Like, here you have Guyana with 800,000 people burning heavy crude, let's just say heavy, just oil. They're burning oil for things. Okay, what's the carbon emissions to that? Now, by the way, I'm a big fan for increasing the quality of life. And it's just kind of funny to see any country like start putting in a bunch of coal power plants, but then they say they have global emission goals. It's like, no, you're trying to bring your people out of poverty goals. Like, yeah, you won't unnecessarily harm the environment in relation to that, but you're going to harm the environment more as a consequence of that. Like, and you're willing to make the sacrifice. Like, no need to be two-faced about things. But here they say, in this, Chapter 6, the government of Guyana supports calls for the elimination of such fossil fuel subsidies, especially in OECD countries where subsidies are the most distorting. This will lead to the breakup of the current monopoly-like situation and the stabilizing of price levels. They are perversely incentivized to make that whole statement. They support calls for elimination of such fossil fuel subsidies in OECD countries. Why? Because then it would make it more expensive. Why would that benefit them? Because then that would bring more business towards them. Why? Because the government has faced local pressures to ensure ExxonMobil pays its fair share of taxes. Guyana received a relatively modest $94.5 million in 2022 as royalty for its Stabroek Block crude oil. It granted ExxonMobil a staggering US $290 million in tax exemptions. These concessions extend to multinational corporations like Hess Corp and CNOOC, further complicating the matter. Well, it's funny. Like, you should eliminate subsidies, and then they turn around and give tax exemptions, which is a subsidy. Now, you could say technically it's not a subsidy. It's like, well, we can play the technical game, and fair enough, but we're going to call that paint with a broad brush and hastily generalize things and call that a subsidy. And this will lead to a breakup of the current monopoly-like situation and the stabilizing of price levels. Well, the monopoly does stabilize price levels, and that presupposes that it's a monopoly. So you have to question the concepts in a statement as much as the statement itself, because you then have to ask what's a monopoly, and is OECD a monopoly, and is OPEC predominantly an OECD institution? And the stabilizing of price levels is an interesting conclusion. Anyway, and then, interestingly enough, general incentives in the mining industry that Guyana offers, i.e., as I'm lumping it together, subsidies. And it's because that gold, bauxite, diamond mining that occurs in Guyana before the offshore oil came along actually made a meaningful impact to the country's GDP. And here you have exemptions from custom duty on most plant machinery and equipment, exemptions from custom duty on raw materials and packaging materials used in the production of goods by manufacturers, exemption from custom duties and zero rate of value-added tax on raw materials and packaging, unlimited carryover of losses from previous years, accelerated depreciation on plant and machinery, full and unrestricted repatriation of capital, profits, and dividends, and on it goes. So that's interesting. You know, people like to talk tough and jawbone and saber rattle, and then they just fold. And I'm not saying that as a morally condemning thing or in necessarily negative judgment. What I'm saying, I understand why they do it. You talk tough and then do the opposite. Millions of people do it. Why wouldn't the government do it? So a couple more concerns in regards to Guyana, insofar as the economy and the citizens and stuff like that go, would be the Dutch disease, wealth managed unwisely. This was published by the IMF. Link in the description. If you don't know what it is, Google it. This video is going to go on long enough. There's entire books written on the topic. Then you have the resource curse. Yet again, entire books written on the topic. Go to Wikipedia, read about it. It's relevant, it's practical, it matters, and it's interesting and fascinating and entertaining and better and will put you in a better situation in understanding the world around you more so than any TikTok videos that you're scrolling through. And then 2 books which tangentially are associated with better understanding how things work that I recommend is Open Veins of Latin America. That is a great book. Takes a certain perspective on matters, but fair enough. I'll leave it at that. And then The Dictator's Handbook, which I think honestly should be mandatory reading for any citizen anywhere in the world, and probably is in the top 5 book recommendations anyone ever asks me about anything in regards to books. And then Tomorrow's Gold, investing wise, would be probably top 5 books. And to actually understand things, not to do what most people do, which is download it on Audible, put it on 2 times speed, and then walk away none the wiser with maybe a cursory understanding, which is better than nothing, but enough knowledge to get you into trouble, but not enough knowledge to recognize you're getting yourself into trouble. So there's that. And then I put the link, it's at the top, so it's out of order, but this, anyone with a Bloomberg subscription, as far as I'm concerned, definitely needs to read this article. This is a great article. I really like it. That's my personal opinion. That's what this channel is, so shouldn't even have to put the disclaimer there. But the world's newest petrostate isn't ready for a tsunami of cash. Now remember, this was written in 2019, which I don't know how you remember that since you didn't know that. So just know it was written in 2019. Bordered by Venezuela, Brazil, and Suriname, all producers, Guyana always held the promise of oil. But for decades after independence from Britain in 1966, explorers drilled nothing but dry holes. We were practically begging people to take a block offshore, says this individual. Nobody wanted to come. Then along came Exxon. It was 1999. Please understand, there's a timing of these event catalysts and inflection points. And normally that's when things start looking good quarter over quarter or year over year. Now you could say I'm a little slow to the whole Guyana thing because the inflection happened a couple years ago. And sadly enough, I heard about it enough and dismissed it quite too frequently and didn't look into it in depth, which is why this video exists. So understand that these things have long lead times. Sometimes years, sometimes decades. And oftentimes, as in most situations in commodities, you need a couple of cycles before a exploration greenfield project actually becomes economically viable and in production, which is to say decades. You know, you do a little exploring while the commodity is up in price, and then the commodity goes down in price, and then you close your operations, you sell it off, whatever. Next commodity boom comes along, it gets explored more, maybe feasibility studies are done, this and that, commodity price goes down. And so it takes a few boom-bust cycles for these things to really take hold. I say that because Exxon coming along in 1999, and really no one was talking about Guyana until 2020, when the first big hit happened. Okay, 21 years. So this is why you don't want to get over your skis and get too far ahead of yourself. And that's the problem with breakout trading versus buying a depressed asset at a fraction of replacement cost or this or that, or the next promising spot somewhere, because you just don't know. There's a molybdenum mine going on by Greenland Resources in Greenland. And, you know, if it does well, you know, it could be a big hit. But do you buy it now at 50 cents a share, or do you wait for it to actually prove something meaningful with takeoff agreements, pre-production, and then you get into the Lysandre curve of investing? So you have to know what kind of investor you are. Because maybe, for instance, cannabis stocks, which we don't really cover in this channel, you could say, when should you buy that? Do you buy it when the company's trading at 10 times cash flow? Do you wait for actual legislation to truly become legally implemented? in that case, you're going to be buying a few $100% off the low. So you have to ask yourself, do you at some point just close your eyes and hit the buy button, or do you wait for a meaningful catalyst? Because there's going to be a lot of false starts and it's going to sputter along the way. And there's going to be a lot of head fakes. But at some point, things might actually materialize. And then you have to assign probability to that and position sizing. So since the cannabis stocks came around, and which I heard you get demonetized, your channels, if they say that or something, because I see some YouTube creators quite hesitant to say marijuana or cannabis. So I probably shouldn't say it either, especially to the frequency, because it might mess up the algorithm, but I guess I've already dropped the ball on that. Anyhow, so you have to determine when you are going to get in. At the 50-50 prospect of something happening this time, at the breakout, at a a stock goes down a lot and then it trades within a range for years, like the cannabis stocks have been doing. Do you buy the breakout or the retest or the bottom of the range? You have to determine how you do it. Or you could say, I'm going to buy 25% at the bottom of the range, 25% at the top of the range, 25% on the breakout when you're buying on a 20% up day, and then 25% on the I mean, you have to figure it out for yourself. I digress. Then it came along Exxon. It was 1999, and I just don't know how to say this guy's name. Cartagena is spelt with a G, but it sounds like a H, and then J's are H's. So Hadio, we're going to call him Dio, okay? It was 1999, and Dio was hitting the government. Guyana and Exxon signed a production sharing agreement that covered a 26,800 square kilometer deep water area spanning virtually the entire width of the country's maritime borders. Given all the unsuccessful exploration, Exxon secured the rights to Stabroek under terms so generous that they would come back to haunt the country. That's some more propaganda writing, by the way, because it's really interesting. Where does exploitation meet taking on humongous risk? Because at this point, Guyana, as we covered earlier, since like 1966, didn't amount to anything in oil. You're like, man, Venezuela has tons of it. Some of the largest proven reserves in the world. So it's like, well, Guyana must have some, but no one really found anything, let alone economical. So you have to ask, when are these usury exploitative measures versus desperate, and that's a tough choice. So I don't like these generous terms. It's like, yeah, they have nothing, no one's found anything, like we're going to spend millions of dollars looking for something, so they're taking on tons of risk. We got gunboats coming and visiting them on their platforms. It's like, so leave the qualitative words like out of it. Exxon plowed on. In 2014, oil prices crashed, and its partner in Stabroek, Royal Dutch Shell, pulled out. Unwilling to shoulder the financial risks on its own, Exxon remained the operator responsible for exploration, brought in New York-based Hess Corp and China state-backed CNOOC, handing them 30% and 25% stakes, respectively, in exchange for sharing drilling costs. When Exxon began drilling the Wildcat well Lisa 1 in March 2015, Guyana was just a couple months away from a general election. On May 20th, 4 days after Granger emerged as the surprise winner, Exxon announced it had struck oil. The timeline would later prove controversial and become a focus of the SARA investigation. But one thing was clear, oil was coming. Like I said, this is a fascinating article that kind of gets into a slight bit of the morality of the cheapness, if you will, which is really a juxtaposition to value versus risk. And since the risk was high, the value had to be very cheap, but it's not cheap in relation to the value, which, is a value trap investor's daily life, saying something's cheap, but it's like, not relative to the risk you're taking on. And then, oh, I guess that was that. So anyway, that's a great article Bloomberg has. Recommend you find it and read it. Then we have a more up-to-date September 28th, 2023, because these things advance over time. Exxon, Hess, exit, I don't know, one of the 3 blocks, offshore oil exploration block in Guyana. Exxon and Hess were among oil companies that submitted bids in an auction for 14 other oil and gas exploration blocks. Results of that auction have not yet been disclosed. Other bidders include Total Energies and Qatar Energy, which means that now more and more attention as things are being proven. At this point, I believe there's 11 billion barrels of oil proven in these blocks, and that will only increase, I suspect. And as a consequence, less risk is assumed because the probability of oil being hit is higher, so it's going to draw more attention. So, the Guyana names to look at. We already showed this at the beginning for the impatient. So, I'm going to touch upon these to some extent. Huge disclaimer here. Do your own due diligence. One of the reasons I'm not talking much about some of these is because I haven't done my own due diligence. And anybody can piece together a bullish article for something on practically everything and make some specific angle. So I don't want to encourage you with such exciting news that you just go out and buy the stock, because people do that, and I don't want to encourage you to do that. These are illiquid names. These are small market caps. I suspect one of these has to go bankrupt. Not Hess or Exxon, at least not in the near future. I mean, we're talking over-the-counter, illiquid, bid-ask spreads, questionable. It's just like, you really got to do your own due diligence here, people. Like, I don't think I've ever stressed that or even stated that in the life of this channel. But these are names that you really need to do. And the cool thing is there's actually a lot of coverage on them. People talk about them on Twitter. There's multiple podcasts discussing these names. Seeking Alpha has, well, I think they have numerous articles on most of these names. I mean, there's a lot of information for you to piece together. And quite frankly, like, I could show you, and I will, cute little pictures of 14 131s. And do you even know what that is? Because if you don't even know what a 14 131 is, then maybe you shouldn't get involved with mining companies, or have a different reason why you're getting involved with the mining companies. I'm sorry. See, this is what I mean. I'm not even confident that I'm saying that correctly. I'm not saying that correctly. And I've just proved my point. And is why you shouldn't even listen to me, and you should suspect my own competency on this matter. Because it's a 43-101. And I think I was saying 14 whatever. So, I'm going to leave this in here. I'm not going to trim this out, because you need to understand that I can get things wrong. Like, here I am talking about 43-101s, and I can't even say 43-101 correctly. And in all honesty, I don't feel too bad about it, because I almost always say it wrong whenever I say it, because for some reason I can't get 43-101 in my head, and I always, in a dyslexic fashion, say it and write it wrong. So, enough of that. So, Hess. By the way, 43-101s are for mineral extractive industries. So, Hess and Exxon are not going to have 43-101s that we're going to be looking at. Now, the links to at least yeah, Reunion Gold and G2 Goldfields. The links are in the description for what I found to be the most up-to-date, or one of the more up-to-date 43-101s. But yet again, there's a lot to this, and we're not going to get into that, really. Hess, what do I want to show you? Guyana. Crude oil and condensate proved reserves went from 65 in 2021 to 116 in 2022. This is from the 10K, which is why there's no 2023 figures. Then you have, that's developed. Then you have undeveloped. So undeveloped, it went from 140 to 164. Positive inflection, year over year. I started the video off with that. Things that are positively inflecting. Then you have production of Guyana. In 2020, 7,457. Then it stepped up to 10,920, which is actually a meaningful step up, with 35, 40%, something like that. Then 2022, it almost triples to 28,526. Like, that's meaningful. That's showing that Hess is putting more and more resources into Guyana. Much of their CapEx is going into Guyana. Much of their time, attention, focus, energy, money is going into Guyana. This would probably be the safest way to play it. I think Hess is either at an all-time high or close to it. Quite the company. And by the way, who do you think is going to be contracted or subcontracted to drill some of these holes? Just like Petrobras off of Brazil gets tons of the attention in regards to offshore oil. Like, there's other places that one can focus on, which has been the theme of this video. Then, excuse my poorly piecing together of this chart, but it is what it is. Average selling price. One of the really cool things about the oil in Guyana is that it's light, sweet crude. And that gets premium dollars. And then you can see the average selling price for Guyana in 2022 was $89.86. It was the second most, or the second highest average selling price between the United States, their offshore, the Guyana, the Malaysia, and the other. Then crude oil per barrel, excluding hedging, versus per barrel versus hedging. Where is it? Yeah, is up there in the top range for Guyana, yet again, because they have the sweet, light crude. Then, this is a amazing factor of Guyana, which is the lifting costs per barrel of oil equivalent produced. Guyana is at $11.23. And that's rather cheap. And the United States is $29. So that's one reason why offshore is also getting attention, because of all the technological advancements and efficiencies that's been developed over time, and the long cycle. You can really make an investment decision figuring out your costs and how much you're going to get paid back, and you don't have to immediately recycle the capital like you do in a lot of the shale basin plays, because your wells are long lasting and don't rapidly deplete. So that's going to draw more attention to Guyana, which is ultimately going to bid up or increase the bid prices for such things, and that's worth remembering. As well as, people, one of the concerns, and I did not even touch upon this in the bear thesis, one of the concerns is something like, well, aren't they just going to expropriate and nationalize the oil industry? And that's actually kind of part of the resource curse because, at some point the nation gets a big enough hit and thinks they can do it on their own. They steal all the stranded assets. The companies write it down, move on, never come back, once bitten, twice shy. And then they try to take it on their own, and governments are not efficient to begin with, yet alone when they don't have the technical expertise, and they become over-reliant on the oil in regards to funding the economy and the corruption and all that stuff. And then the perverse incentives, the bribes, all of that goes into it. But like, they're in the beginning stages. Like right now, as that one article, the Bloomberg article pointed out, Exxon got a really good deal. But over time, what will happen is the country will take more and more profits from the production of the oil, and then they will slowly finagle their way in and getting the technical expertise themselves. Like, this is over years and decades. Like I said, this all started in 1999. A feud started with Venezuela 200 years ago. That what I'm talking about now is years or decades, depending upon the greed and ignorance and ineptness of the government. So when most people struggle to hold a stock over the weekend or over a holiday weekend, the time frame is completely different. So yes, they'll build their expertise, and then maybe they'll nationalize it. And at first it'll be partially and then completely, but then they'll still contract the Americans. And at some point they kick out the Americans. But look at Saudi Arabia. Who do you think is benefiting from the jackup rigs off the coast of Saudi Arabia? Like, they're contracting people still. And it takes a long time. A long time. So, and there's all kinds of different paths and trajectories that can be taken. And some get greedier than others quicker. So you have to factor that. So yeah, they could expropriate, nationalize everything. And normally when commodity prices get highs, when that happens, because then they're more incentivized to steal, then they steal it, the commodities price crash, the economy goes to hell, and then, well, it's just a spiral from there. So hopefully that doesn't happen. Okay, on to the next one, Frontera Energy. Frontera Energy, this is from the presentation. Nothing original here, no unique insights. Do your own due diligence. Frontera Energy Corporation is a Canadian public company listed on the Toronto Stock Exchange. The company is involved in the exploration, development, production, transportation, storage, and sale of oil and natural gas in South America, including related investments in both upstream and midstream facilities. They're, at best, that I can tell at this point, they're more of a Colombia play, which is interesting because they're almost more of a Colombia play than they are an oil and gas play, just like Ecopetrol, EC is the ticker symbol. The people's political woes and worries over a country and the subsequent investments in the country have more of an impact than the idiosyncratic fundamental story developing in the country for individual participants. So Colombia has kind of been beaten down. So as a consequence, due to presidents, and I'm not going to go down that rabbit hole. Same with Lula and Petrobras. So a new president comes, or Chile, or on and on it goes. So they're kind of a Colombia play, and they're getting discounted as a consequence in part of being a Colombia play, but they're doing things in Guyana. Frontier has a diversified portfolio of assets with interests in 32 exploration and production blocks in Colombia, Ecuador, and Guyana, and pipeline and port facilities in Colombia. Now, I'm really fascinated, and I would like to do more research on these ports. I kind of think South America is doing well enough, and if you think, I'm not saying we are, but if you think that we are in an oil super cycle over the next decade, then I would think South America would benefit, and some countries more than others. But I'm really interested about these port facilities. Really interested in that. Don't know why. Maybe it's because it's ignorance and I'm just a curious person, so I'd like to learn more. But I really wonder about the economics and the profitability, revenue generation that could be derived from it. Frontera is committed to conducting business safely and is a socially, environmentally, and ethically responsible manner, blah, blah, blah. 41,000 barrels a day production. So keep that in mind. That was the third quarter production. So they're not a massive producer by any means, but they're producing. They're doing things. That's better than some greenfield exploration explorer that has nothing, no cash flows, and just dilutes the hell out of the shareholders to fund a lifestyle company for management. So they're different tiers. And another risk that I should have said earlier, why you need to do your own due diligence, is the shareholder dilution that comes as a consequence of chronic capital raising and equity dilution from them being broke, not having money, projects going over budget and over time, and so on and so forth. CGX Energy. Now, something to know about them is also of my understanding, and yet again, this is like low fruit I'm picking at here. Frontera Energy owns like 70-75% of CGX. So are they just going to absorb them? I also put Frontera Energy and CGX together because, like, are they just going to become one company? Same thing with the two gold companies. I suspect at some point they'll just become one gold company. And then that one gold company will get bought out by a major. That's kind of my uneducated prognostication of matters. But I put up this slide specifically because CGX does other stuff. But I'm really interested in these deep water ports. And here they got one. Grand Canal Industrial Estate, incorporated in Guyana, June 30th, 2010. Blah, 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 blah. I think I thought there were one of these two. Oh, no. Principal objectives are to build and operate the Berbice Deepwater Port on the Berbice River in Guyana. GCIE has expended a total of $22.8 million as of February 2023 on the development of the Berbice. Okay, this is not saying what I thought. I thought they were supposed to be done with this. Nope. I thought they were supposed to be done with this come the end of 2023. I'm not seeing that mentioned here, so not sure where I got that piece of information, but nonetheless, look it up. You should find out in your due diligence. Then we have Reunion Gold. Look at this, a map. You like pictures? Here you go, here's a map. Now, if you notice, the gold deposit is on the left side of Guyana, and it just so happens to be on that disputed area. So if Venezuela did do and invade Guyana to take land, then, well, that will be quite a impact to Reunion Gold. Now, yeah, I mean, I'll just leave it at that. But know that Guyana is also being investigated by other companies. I've not heard of most of these companies, so I don't know. I Am Gold, Camp Cayman, then I Am Gold has a Rose Bell, and then I don't know these other companies. But just know that other people are poking around in the Guyana Shield of South America, which might mean something. Then, oh, this is from the 43-101. I think I said that correctly. 43-101. Yeah, I think that's correct. So, inferred minerals versus indicated and then reported at a 4.0 GT gold cutoff. And then I think the average gold mine has a 4 to 8 grams per ton gold production range. I think that's an average gold mine. So that's worth noting something. So, what does this mean? You tell me. Like, is this impressive? Is this not impressive? I think it's better than some of the garbage that's out there that's nothing more than a stock promote with management who's never engaged in the actual mineral field, i.e. gold. If you were a CEO of a bauxite company in some demographic region, doesn't mean that you're competent at being a gold CEO in a different region with different underlying materials. So don't attribute a false sense of authority to someone who doesn't deserve it. Now, of course, that doesn't mean that he's not more educated than you are on the matter, but don't confuse competency in a silver mine in Mexico with uranium mining in Kazakhstan is what I'm saying, but that seems more obvious. But you also shouldn't confuse a gold mine CEO in Chile with one in Argentina versus one in Brazil versus one in Guyana. So we already showed this picture of the heart of the Guyana Shield and what's going on there. And this is a picture, I believe, from Reunion Gold's site. You can see where Reunion Gold is, and then you can see where the OKO site is for the other company, for G2 Goldfields. And then a merger isn't out of the realm. And then you have, as a side note, then you have the next gen uranium play going on in Canada, and there's another operation beside them that I cannot think of who they are at the moment that's going on, and it would only make sense, yet again, when you're in these remote areas and you and another guy are doing the same thing right next to each other, a lot of times it only makes sense to actually have the synergies and go into a joint venture together once you get large enough and it's profitable and you can start attracting majors to buy you out and stuff. It only makes sense, but you got to get to that point first. So with that said, I'm done here. That's the end of Guyana. The next slide is going to be stock portfolio performance. If you didn't know and are still listening, then you'll know, or you won't know, but let me tell you that this is an investing channel where I give my opinions, and I also show my stock portfolio performance because fundamentally my belief is that a person can outperform the market. So that's what I'm trying to do, and I'm demonstrating that week to week, showing my stock portfolio performance in a transparent fashion. Maybe I do outperform, maybe I don't outperform. I give my thoughts, ideas, that's what I do. So with that, stock portfolio performance, you'll see that I own none of the companies that I talked about so far. One reason is I wouldn't mind perhaps dabbling in a play, just in a degenerate gambling fashion way, because I'm not a geologist and normally I don't appeal to authorities in that fashion, but I don't know what's going on with Reunion's Gold 43-101, so it's really more of a bet on gold and speculators and a greater fool's theory, and I can justify the investment based upon those things, but I'm not going to pretend to be some expert, and I can educate myself on the matter more. But the reason I really haven't taken a speculative play is because it would be a small size, and the problem with that is, let's say it's $50. By the way, my account, I deposit $50 a week, every week. That's the cash flow for the account. Right now I'm at roughly $2,000. So if I invested $50 in a over-the-counter transaction, I believe you get hit with an $8 transaction cost when you buy and an $8 transaction cost when you sell. Now, buying any of these speculative names, I would expect you to have the anticipation of a multi-bagger on your hands. So to keep the number simple, well, I already have, so that's $16 to get in and out of the stock on a $50 position, which is to say that I need to make at least a 32% gain to profit off of the play. And, well, if I'm expecting 300% returns, there's nothing wrong with that. But it's still psychologically unsatisfying, and I find it irritating, and I'm trying to stack my cash right now, not speculate on things I don't understand that well. So I don't own any. So stock portfolio review. As I mentioned, the elections are happening this Sunday in Argentina. So we will see what happens with my YPF holding. I bought some, where is it? DRS, Leonardo DRS. And it's kind of a play on what's going on in Israel. They're a defense contractor, IPO'd a couple years ago. They actually absorbed, RADA, which, oh, well, I'm losing my thoughts here. The dome that they talk about in Israel that shoots the missiles down, that uses that technology, RADA is them, and so that's kind of a play with DRS. And the company actually kind of looks interesting in all reality, just as an investment. I mean, they have two segments. I'm not doing a deep dive. They have two segments. One of the segments is blah. The other segment has actually rapidly been growing, and it actually kind of looks like an interesting play. Now, the problem is I bought it essentially on a breakout after a lot of momentum and a 12% up move. So do I hold it as a trade and stick to that, or do I hold it longer term? I don't know. It's a small position. I'm not the most worried about it. But the problem with small positions is as you get more of them, they are one amalgamation large position, such as Surge Play plus Town Square plus Leonardo now becomes 2, 4, 7, 8% of my portfolio. And actually, it's more than 8% of my active portfolio because let's call it 5% cash, even though I have some pending transactions. So let's just call that 10% cash, which means that 8% of my entire portfolio, it's now acting as 10, 11, 12% of my active portfolio. So that's how those things play out. Gold names did quite well over the week, and yet somehow I'm now negative again on Triple Flag, which is a royalty company for gold and precious metals. And it was actually positive a few percent, but then kind of pulled back. Is what it is. If you pull up a chart of gold versus TLT, treasuries, whenever yields stop climbing, which could be multiple percents from here, which means quite a bit of pain for the gold names, perhaps, that these things really want to break out. But anytime there's whenever TLT has a bounce, gold names do real well. Not every time, but often enough. So there's a correlation there. I'll just leave it at that. What I did add to, or added as a position, finally, talked about it for months, finally did it, wish I bought more, that's how it goes, is Sprout Physical Uranium Trust. I bought it, SRUUF. I've been eyeballing this bad boy for quite a long time. Those who've been with the channel know I had a TD Ameritrade account which prohibited me from purchasing it unless I called it in over the phone, because why not? And now with Fidelity, you can straight up buy it, and I've been waiting for a pullback. I got the pullback. It's a lot higher from then when I initially wanted to buy it, but uranium ran really hard. So, man, I bought the dip. I'm bragging here, so next week it should turn in my face, but I was really afraid of this thing falling more from a technical chart perspective. It had one of these tiny little head and shoulder things going on, and I was like, I'll buy more, and it's oversold or overbought on a weekly chart. So I was hesitant about that. And then the fundamentals I'm bullish on, but from a chart perspective, I just couldn't have the confidence to get into it and size it up. But anyway, I initiated a position. I got it going, 2.5% of my portfolio, whatever. I got a position, up 10% on it, which is kind of sad because here I've been in the Sprott uranium miners pretty much most of the year, and I'm up 26% on that. So 1 week on the physical uranium trust, I'm up 10%. 6 months of uranium miners ETF, I'm up 26%. So that's quite a disparity in price discovery there, but is what it is. We're in earnings season, so I'm kind of interested in what SurgePay does. I'm also kind of interested in what TownSquare does with their how bad the interactive segment handles, and hopefully how well the Ignite segment does. SurgePay, quite interested in, they kept pushing for better numbers in the second half of the year. Well, guess what? We're in the second half of the year, so wonder how they come through with that. And yeah, I think I'll leave it at that. I don't know what I'll do for next week as a video. There is a uranium royalty company. I really like the idea of royalties. I find it fascinating. I'm really interested in royalty companies in general. And there's just so happens to be a uranium royalty company out there. And I saw someone make a comment in one of my videos about it, and that kind of prompted me. I don't know if I will. I might cover Argentina news, if Maduro or Bullrich, not Maduro, I've said that name too many times a day. If, I forgot his name. Talk about, if Javier Milei and or Bullrich don't win in the Argentine election, then that might free up some capital, because like I said earlier, when I made my Argentine video, whenever that was, it's a presidential play, so we'll see what happens. Either I sell it or I hold it. That's really a binary outcome. And if it does, then we'll see what I do. Might do a video on that. Might do a video on none of the things I mentioned. But with that said, I'm going to end this video. Thank you for watching, and until next week.